Welcome back to Cup of Joe Crypto, where I bring you the latest news in Bitcoin and cryptocurrencies for today. Overall, total market cap is at 252 billion, with the BTC dominance remaining strong at 69.4%. Bitcoin having a slight green day with a 1.33% increase, bringing us to 9774. The other top 10 coins have kind of had a stagnant day. No big increases or decreases. I know Monero jumped back into the 11th spot over Cardano, having itself an impressive 4% rise. Again, as I've said in my previous videos, I am a big Cardano fan. I think it's only a matter of time before we see them back in the top 10 and performing quite well. It's just hard to believe that one ADA is worth less than a nickel. Blows my mind. Anyway, I want to start off also by saying I am not a financial advisor. I do not take my advice. Do your own research. Invest your own money into where you think it will prosper the most. So moving into the first article. Sorry guys, I can't get my words straight today. I think this is a question that all of us have asked ourselves numerous times. Will Bitcoin's looming halving ignite a recovery before 2020? Joseph Young goes on to state by CCN Markets, every 4 years the Bitcoin network executed a block reward halving, which reduces the rate at which new coins are introduced to the network by 50%. Historically, block reward halvings have led the dominant cryptocurrency to experience large extended rallies. Based on data provided by one cryptocurrency analyst, block reward halvings in 2012 and 2016 correlated with tenfold Bitcoin price rallies, from 10 to 100 and 1,000 to 10,000 respectively. Showing you the charts from the Bitcoin halving. I think a lot of us are anticipating this happening coming up in May of 2020, and projecting that it will definitely make the price of Bitcoin soar to new all-time highs, easily surpassing 20K. I'd like to see at least a 50K Bitcoin in our next bull run. At least 50K, but I am a Bitcoin maximalist and have all the faith in the world that this asset can outperform many others. So it says, although the historical performance of BTC does not guarantee future price movements of the cryptocurrency, many analysts foresee that the asset adhering to its previous trend in rising in value in anticipation of the halving. But it then goes on to say, is the BTC block reward halving already priced in? Due to its direct impact on the supply of Bitcoin, the block reward halving is considered to be one of the few fundamental factors that could have a long-lasting impact on the Bitcoin space. But on the other hand, halvings are regularly scheduled events. They're not surprises. Consequently, the market could have already priced in the supply rate cut, even though it's still 8 months away. According to a report by Grayscale, a cryptocurrency investment firm with $2 billion in assets under management, many investors are still not familiar with the halving. That's especially true of investors that bought their first BTC within the past 12 months. So what this is basically saying is there are some companies or people out there that believe that the recent price spike within the last 3 months was due already to the halving becoming close. With it just breaking the 1 year mark, I don't see this being the reason as to why we had a spike in BTC within the last 3 months. Why all of a sudden, 15 months away of the halving, will we all of a sudden have people FOMO and buy in? I think it's the price was at where it needed to be for a lot of people buy in, and so now they bought in. I think this is just going to have more FOMO, where more people are going to buy in, afraid that they're going to miss out on that next bull run. Next article by Joy Kant. It says North Korea denies it stole $2 billion from crypto exchanges and banks. North Korea accuses the United States of spreading rumors, and on September 1st, the country's official state media, the Korea Central News Agency, denied allegations of massive theft by North Korean agents. As Cointelegraph previously reported, the United Nations Security Council North Korea Sanctions Committee said that Democratic People's Republic of Korea cyber actors were raising money for its WMD, Weapons of Mass Destruction program, with total proceeds to date estimated up to $2 billion US. And in response, the KCNA cited a statement from the National Coordination Committee of the DPRK for anti-money laundering and counterfeiting, the financing of terrorism, which claims that the United States and other hostile forces are now spreading slanderous rumors, it said. It goes on by statement saying such a fabrication by the hostile forces is nothing but a sort of nasty game aimed at tarnishing the image of our republic and finding justification for sanctions and pressure campaign, the TBRK. And this goes on to say the statement further adds that the UN is reenacting the same old trick as the Hitler fascist propagandists used to cling to. So, this next article I thought was pretty interesting. As a lot of you probably have already heard, Capital One was hacked, affecting millions of accounts and up to millions and millions of dollars. It said the Capital One hacker used stolen computing power to mine crypto, which I thought was very, very interesting. A federal grand jury written by Daniel Kuhn indicted of a former Amazon software engineer accused of breaching Capital One's data servers reveals instances of cryptojacking at the heart of her scheme. Between March and July 2019, Paige Thompson accessed at least 30 institutions' servers managed by an unnamed cloud computing company, compromising at least 100 million customer accounts, according to a release published Wednesday. While there is no indication Thompson attempted to sell this information, she did use the stolen computer power to mine cryptocurrencies. According to the indictment, Thompson scanned for and misconfigured vulnerable web firewalls to gain access to rented cloud servers. She would duplicate sensitive buckets of data onto her own server kept at home and cover her tracks using the anonymizing Tor browser. The object also was to use the access to the customer's servers in other ways for her own benefit, including by using those servers for cryptojacking, wrote prosecuting attorney Stephen Masada and Andrew Friedman. Thompson reportedly spoke about her fraud over Slack and Twitter DMs. At one point, Thompson, under an alleged pseudonym, posted messages referring to cryptojacking over a Slack channel. I'll be employed again soon, and if I had a partner, I could have take over my cryptojacking enterprises and be stay at home. One such message read, according to a report by Forbes staffer Thomas Brewster. Another Slack message read, for some reason I lost a whole fleet of miners all at the same time, so I think someone is on to me. Law enforcement became aware of Thompson's activities after the shared information on GitHub relating to her theft of information from Capital One's rented servers. The indictment also cites 3 unnamed victims, including a state agency, a telecommunications conglomerate outside the U.S., and a public research university. She faces up to 25 years in prison if found guilty of the charges, which includes 2 counts of wire fraud and computer fraud. Additionally, Thompson is asked to forfeit her ill-gotten gains or equivalent assets if inaccessible or untraceable. So I thought that was amazing. That not only was she, able to gain access and break into the Capital One accounts, but she was also able to use that power to mine cryptocurrency. It just shows you how much money potentially is in cryptocurrency. Of course, this isn't using crypto in the right manner, but it shows you the desire of how what people will do to get those cryptocurrencies and the risks that they're willing to take for it. And this last article, which we've all heard discussed over and over again, a lot of this is Bitcoin compared to gold. And so the question is, could Bitcoin potentially replace gold? As we all know, the comparison. This is written by Muskin Barakish. The comparison between gold and Bitcoin has now been done for quite a long time by market observers. The primary basis for this comparison is the fact that both of these assets hold a large value. Both can be considered as speculative investments, which require due diligence by the investors for them to benefit. However, key differences such as the very nature of these assets, that is, Bitcoin being digital and gold being tangible, has led to many economic activists predict that Bitcoin could possibly replace gold. It is important to note that the relations between gold and Bitcoin values have been fairly inverse. However, the existence of any causation is fairly subjective. Bitcoin and gold, more related than we think. The most significant line of parallelism that can be drawn between the two is the fact that both Bitcoin and gold are safe haven investments and can fetch large amounts of profits if invested smartly. Gold is a precious metal extracted by mining, and its value is decided by the supply and demand. Much like gold, Bitcoin is also mined, and more it is mined, the harder the process becomes, and the value is decided by the supply and the demand. The mining of gold, however, is a physical process. It is interesting to note that the prices of gold and Bitcoin have been in adverse reaction since a long time now. However, it is worth noting that the inverse relationship does not imply that the two are interrelated. The fluctuation in Bitcoin value depends on factors such as the volume of transaction, while gold's price changes with other factors such as interest rates and so on. That being said, the inverse relations does attract attention and increase the value of gold could mean a bearish trend for Bitcoin. And this is where Bitcoin beats gold. Firstly, the fact Bitcoin is based on a digital platform which allows the currency to be sent across at the speed of information without the requirement of any intermediary and is convenient. This directly supersedes the physical nature of gold. In an era where digitalization is thriving, Bitcoin can certainly get an edge over the tangible currencies. Bitcoin fills the criteria of being durable to any threats of hacking. It has a unique identity which makes it very verifiable, and most importantly, is far and more portable than gold. Guys, how much gold could you carry, across the country without drawing any red flags? 1,000, 2,000, 3,000 ounces? Guys, you could carry $1 billion on a keychain from one side of the world to the other, and nobody has a clue. It's amazing. So it goes on to state that, moreover, the availability of information is more in the case of a Bitcoin. A person can always obtain information regarding how much Bitcoins have been mined, and the maximum supply can also be known. As it stands, 21 million Bitcoin. However, the volume and abundance scarcity of gold is not known. This makes its value subject to drastic changes in the future. The perfect time. Bitcoin of late has had a major role in revolutionizing the global economy. Its store of value feature has attracted various investors, which has been greatly facilitated by the ever digitizing world. Therefore, this becomes the perfect time when Bitcoin can be utilized on a larger scale. It has the potential to disrupt and enter the markets with the most value. A shift from traditional and conventional currency towards digital currency could potentially take place on a larger scale. The investments of the current generation are more inclined towards digital currencies. A recent survey conducted by Bitcoin Survey Fall stated about 30% of all millennials would rather invest their money into $1,000 worth of Bitcoin than $1,000 worth of government bonds. The progression of generations is increasing the role of Bitcoin in people's lives. And an amped example for the widespread adoption and spread of cryptocurrency is seen by the fact that over 100,000 shopkeepers have started accepting Bitcoin as a form of currency. Maybe all this seems too ambitious, but the fact that Bitcoin replacing one of the most prevalent safe haven assets seems less fictitious and more realistic as an indicator of its widespread adoption and the role it could possibly play in the global economy. Guys, I've stated this, I believe in at least 2 or 3 of my videos, we are so early on in the adoption stage of Bitcoin. I think easily, I agree with a lot of the points in this article. We could easily be replacing gold with Bitcoin. Guys, do we really know how much gold is left out there? No. A lot of people don't even hold gold. They hold a piece of paper stating that they have gold. Yes, you don't physically hold a Bitcoin, but you can transfer it and you can show it as a store of value, or how it's being held. Um, I think we're early on. In regards to the Halving, igniting a resurrection, I'm more so on that side. I don't believe that the Halving being 15 months away has brought the price all the way up, and now all of a sudden it's going to drop back down, because the reason it went up was because of the Halving being 15 months away. That's completely ludicrous. Um, I again ask everybody, I'm new. Give me a shot. Give me a chance. I'm going to keep continuing to grow, continue to get better. Please, if you liked the video or find it informative in any way, smash that like button. Please tell your friends. Hit that subscribe button. Again, the first 100 subscribers will be entered into $100 free of Bitcoin. I will randomize the list. Who's ever at the top of that list, I will send them $100 in crypto. Until next time, guys, I appreciate you listening, and I'll see you tomorrow.